How the mighty have fallen. And I'm not just talking about the stock market. I'm talking about the dollar too. My name is Blake Morrow, and you are listening to the Week Ahead video. And hell, it has been a week. It has been one heck of a week, and we have so much to discuss. The volatility has been epic. And as a trader, if you guys just trade the markets and you love this volatility, make sure you give these videos a thumbs up. Subscribe to the channel below. Hopefully especially like the last several weeks, hopefully this has been great preparation for you as a trader getting ready for the next week. We've seen epic volatility. It's given us so much opportunity. And the best way to take advantage of that opportunity, obviously, is to be involved in the trader funding program. Now, for the very first time, let me announce this. For the very first time, if you are a US-based trader and you want to be funded, you can skip the assessment process. So you have two different methods. You can actually go through a one-step assessment, which if you want to access larger amounts of capital, $25,000 to $1 million accounts, and you think you can make 10% without losing more than 6% on a trailing basis, then check out the one-step assessment. It's going to be an easier pricing schedule for you. But if you want instant funding and you don't want to take an assessment, you can go from a $5,000 account all the way up to $1 million account, or a $100,000 account, excuse me. All right. Now, one thing I do want to mention with the trader funding program, if you are going to take a one-step assessment, and you're new to the funding program, you also get a one-on-one consultation with me. I'll show you all the tools with Forex Analytics. It's available to you. I'll give you some ideas and show you how I passed assessments in the past, kind of get you prepared for what to expect if you're new. And if you're taking a reassessment of over $100,000 or more, you can also request a one-on-one session with me. So make sure you guys take advantage of that. It's a good deal for any of you guys getting involved in the Forex Analytics community and wanting funding. But like I said, we've got so much to talk about this week. So we're gonna jump to it, and we're gonna just talk about some of the epic moves that we've actually seen. And the biggest one has been the euro. You can see the euro this week. Now, if you recall last week, I talked, and I'll show you last week's charts. I said the euro is building a base. Come on, I would be lying to tell you I was expecting this to happen this week. Completely lying. I did not expect the euro to get goosed by what is this? A 5% move higher in the euro US dollar this week. That was unexpected, and it's been a hell of a move. Now, did I expect the euro to be basing and for us to break out eventually to the upside? Yes. What caused this move? Well, this excessive spending that we've seen from, excuse me, Germany on they're going to be spending money on defense spending and a lot of other things too. And it's not just Germany. You're going to see a lot of other European countries probably expand their balance sheets a little bit and spend more on defense spending, especially as the U.S. removes itself from NATO and they want to make sure they're protected. They are going to end up spending more money there. So just keep in mind that the euro will probably stay very well supported on dips. But that was obviously a very big move. There were so many people that were looking for the euro dollar to go to parity. And although we've been seeing it as a base, that green line was there from last week. You recall from the last week ahead video, it has been an epic move. Now, the question you probably have is, where's it going to go from here? We're going to talk more technicals in a bit. So remember to follow along with everything that's happening this next week. You can just go on your Forex. Once you're a member of Forex Analytics, remember it's only $1 for 10 days to try it out. Jump in the chat rooms with me. You want to know, I want to just show you just some scalping that I've done this week. I mean, just from today. Here's the trades room. You guys can just take a look at all of my open positions. This is my Euro Swiss Here's the euro US dollar. I closed out a profit there. This is just from the last couple hours. I was stopped out in my euro Canadian, but I got back in the euro dollar and euro Canadian once again, took profits right at the end of the day here, and I'm wrapping things up for the weekend. But if you want to be in a trades room like this, you can join the trader funding program. You can just join Forex Analytics. It's only, like I said, it's only $1 for 10 days. But download the mobile app and this is the desktop, and you can follow along what's happening this next week. Now, there's just a couple of things next week that I think are really important that we need to talk about. Shoot, I guess I'm going to start here. One of the big, it's not a big news event, but it's something that I think is very much worth watching, is the US dollar Norwegian krona. In the US dollar Norwegian krona, you can see this massive breakdown. We hit the 618 retracement. We're probing horizontal support. You can just do it like that. And you can see that we're holding here. Now, on Monday, early morning, so right after the weekend, there's going to be Norwegian CPI. And if inflationary pressures are strong, you could actually see the US dollar and Norwegian krona break lower. Now, for me personally, what I'd love to see, and not sure if we're going to get it, but I'd love to see a bounce back to the 200 DMA before an actual breakdown. I have been bearish the US dollar and Norwegian krona this entire week. It's just been one of those that you had to chase it lower. All right, the next thing I wanted to mention, just because we came off a jobs report, which wasn't bad, but next week on Tuesday, the JOLTS jobs data, the job openings data, that's going to be really important. Now, take a look at the dollar, and the dollar's had this massive move lower. We broke through the 200-day, broke through the 618. If you've been on any of the shows, now, do you know how to get to the shows? If you don't, you just go to Forex Analytics, go here to the homepage. These are free shows. You don't have to be a subscriber to listen to our free shows. We have the Flow Show and European Hours. Ryan Littlestone and K-Man host that. I listen to it every morning when I get up. I listen to the recording because they record it a couple hours before I actually wake up in the morning. But if you want to get my analysis every day with the rest of our team, just come to the F.A.C.E show. It's every single day at 8 a.m. for the last 8 years. Every single trading day for the last 8 years. So you should be listening to that every single day. Anyway, one of the things that, I've been, whoops, I didn't want to click on that button. Sorry, I didn't mean to do that. You can register right there. One of the things I've been talking about is I wanted to short the euro at 109. Well, today we got as high as 108.80s following the jobs report. I've shorted the euro, I think 3 or 4 different times over the last 5 hours. Again, if you want to see every time that I did it, just go to the trades room and you can see exactly, when I'm shorting it and what time and, the time stamps. You can match it up with your charts if you want to go to that extent. But I've literally been planning on buying dollars or shorting the euro about near 109 ever since we got this breakdown. Now, here's the thing. I still believe, as I've told you guys the last several weeks, I'm still a dollar bear. But we are at levels that you are going to start to see two-way price action, which is great. You're a trader, get short when it bounces, when it dips a little too far, gets a little oversold, you get long. That's a great trading market, and that's the kind of market that we're going to be in right now. And I hope you can take advantage of it with us. Again, just jump in the chat rooms. You can do that. But the JOLTS data could move that dollar. I do think the dollar is getting a little oversold. I would sell any move that we see this next week up towards the 200 DMA. Now, what could actually produce a move like that? Well, on Wednesday, we have the CPI. So if inflation comes in hotter than expected, then we could actually see a rally in that dollar index back, to levels that give us better areas to be on the short side. Now, what else is happening on Wednesday is the Bank of Canada. And I'm going to say, I just need to say this. Let's go over to the CAD. This is a big, hot mess right now. And the dollar CAD is very, very challenging. Here's the good news. If you live in Canada, first of all, I do want to say this as an American. What's happening between Canada and the U.S. with the trade war has nothing to do with myself or most Americans here. I mean, Americans either agree or disagree, but the bottom line is we are just innocent bystanders kind of dealing with it. The good news is if you live in Canada, you have a situation where where Trudeau is probably going to be replaced here within the coming weeks. And I think the tensions will go down between the US and Canada. Because whether you like it or not, Canadian, American, whatever, somebody that just is kind of watching it all, Trudeau and Trump are like oil and water. So I think that's what's created a lot of this volatility. I believe that when Trudeau is replaced as prime minister, you're going to see the tensions actually cool, and I think that's going to be very bullish for the Canadian dollar overall. But for right now, until that happens, whether it's Mark Carney or some other liberal, I have no idea. But whenever that happens, I think the Canadian dollar will actually strengthen a little bit. So just keep that one in mind. But the dollar Canadian, big hot mess. We got the Bank of Canada this week. They are actually expected to cut rates. And you have to imagine the Bank of Canada is going to be very defensive, just understanding that this tariff trade war between U.S., Canada, Mexico, and U.S. and everybody else could actually, really weigh on economic growth. So I would expect that the BOC comes off as being rather defensive or how should I say, dovish. But inflationary pressures are obviously still pertinent. So we are expecting a cut. Not sure how to trade the Canadian, but that's okay. If it's unclear, it's unclear. I mean, that's part of trading. If it's unclear, you move on to something else that's given us a little bit more clarity. Moving along for the remainder of the week, on Thursday, we have producer prices in the U.S. We have unemployment claims. Obviously, after this jobs report, because the U.S. jobs report was not that bad, I think you're going to have traders that are actually, focused on the week-to-week unemployment claims. And at the end of the week, we're going to have UK GDP. And by the way, I want to point out with sterling, since we got UK GDP coming up, notice how we've stopped at the 618 retracement. Now, a lot of the sterling rally this week is just been on the heels of the euro. If you look at the euro sterling, you can see how bullish this move has been. So that means that the move in sterling, the pound dollar, has been more of a result of what's happening in the euro dollar. So I think that there is a risk right now that cable actually pulls back, especially if the GDP numbers are not super hot. So you have this rising channel. I think that the risk might be that we see a move back below the 200 DMA before a bounce. So just keep that in mind as we head into that data on Friday. Friday, we also have the University of Michigan consumer sentiment and inflation expectations. And based on eggflation and tariffs, consumer inflation expectations are going to matter this next Friday. All right, that's the majority of stuff that's happening this next week. I am going to go into so many other things. I'm going to talk about what's happening in gold. Can we reach 3,000? I'm going to talk about crude, the bond market, what's happening in yields, the S&P. I got to talk about what's happening in the equity markets. I've got to talk about the big distribution patterns in Bitcoin and the S&P. And I'll give you my top 3 trade setups for next week, and I'm going to review the ones from last week. But before I do that, guess what? We're bringing in Nick from Trading Analytix. He's going to give you an overview of the indices and some individual stocks that you should have your eye on. So stick around. Here's Nick.
Hello everybody, my name is Nick Groves with Trading Analytix. Blake, thank you so much for passing on over to me. I'm going to go ahead and talk a little bit about the equity market and what a week we just saw. So you can see that I have the triple Qs listed up right now. Overall, the market closes in about an hour. The S&P, NASDAQ, and triple Qs all down just over 3% this week, which is not common, right? And we're also hitting some uncommon levels, which is why I'm showing you this chart, because it's less, there's less drawings on it than some of my others. But we tagged the 50% retracement here in the triple Qs. We also came near the 200-day moving average. Two pretty big levels. We also came near the weekly 50 DMA on both the triple Qs and the NASDAQ, okay? And that's really been the name of the game this week. We're hitting big monthly levels. And, if you remember our week ahead video from last week, I had this buy zone listed out in between the 50 and the 38.2 with this horizontal support from the breakout back in September that was back tested twice in the fall. So that was that zone that I had. And I hop on the daily roundup most days with Blake Morrow, and we were talking, and I mentioned how I'm stepping into my buy zone, and he kind of just goes, "Why?" And the way he said it registered with me. This is a pretty scary market, but also reminded me, getting to these levels, 200-day moving averages, monthly fibs. It's very rare for us to get to these levels on good news, and hindsight trading is great to look back at and say, oh, I would have bought on the 200 daily moving average, but it's really terrifying to do it in the moment, right? And I don't know if this is necessarily going to hold, but what I will mention is plan your trade your plan. If you don't feel comfortable, this is an environment where you can be profitable sitting on your hands and not getting whipped around, because we have had such a whippy environment. I posted this chat in the Forex Analytics community. I posted this stat. I hope I said that right. But you'll notice we've had a market where there's 6 consecutive days of plus or minus 1% changes. How wild, right? And, that doesn't give too much clarity for the week later. 56% of the time you're positive. But here's what I will point out. If we do get a positive week next week, you'll notice that all the other times we had a positive week 1, weeks 2 to 1 month, 2 month later, we're all positive moving forward. So if you are a bull, you really want to see this market turn positive next week. Now, although we're seeing a little bit of dip buying, and you'll see that the NASDAQ on the 4 hours having some really nice bullish divergence, forming this wedge, S&P also in a wedge trying to get out of it. We still have not cleared very significant resistance. We have to get back above 21K in my opinion before the NASDAQ is out of the woods as far as selling off dramatically. And I'll talk more about that in a second. But the S&P, it needs to get back above probably 5880 or so, 5900 to really ease off this steam. Now, what I'll mention is next week, let's say that we close somewhere near 5840, 5850, and we're still on the underside of this resistance. You could still say that's bearish, but I'm probably going to be coming back to the stat and saying, hey, we had a positive week. Week 2, if you're positive week 1, infers we should be positive the following one, which would mean that if we get going above here, there could be a squeeze. Now, conversely, I will mention if we come up here in the S&P and then, reject, things could get really ugly because we are testing such critical levels. Things could get really ugly. And why this looks so terrifying is if you take a look at some of the Mag 7s, like Microsoft, that has been in this range for the last year. This is from January of 2024. It's testing range year lows. Okay, now if those are broken, you have to imagine that everyone who got long in here is going to run for the hills. I love my 38.2 pullbacks and they look cute and everything, but I think we'd slice through that like hot butter in the event that we break lower. These are scary levels, right? But what I will point out is these levels, these major supports are typically bought, and you're seeing some of them bought in Google. It held its very key support on this trendline support. I think Apple's looked pretty decent. Amazon trying to hold its 200-day moving average as well. Needs to get back above this 206 level. And we're testing levels not seen since November. So we're really back testing Trump administration, the market's conviction for Trump to lead this market higher. And you'll even notice that in a stock like Tesla, where there's a lot of ties between Elon and Trump, right? I don't really care to get political on this. I just know that we're back testing a huge breakout, and I love back tests. That's why I have a buy zone here. You'll notice that this trend line acted as resistance from July, and then eventually the breakout in November, but we're back testing it now. And you're also getting about a 50% discount on this stock. Now, if you don't think the economy is going to fall under, this isn't a terrible level to look at Tesla. And I think that's kind of the thought process behind some of these other big tech stocks. Maybe this isn't a bad level to buy. But I will say, and what's so scary is that you have stocks like NVIDIA, which NVIDIA has been your poster child for this bull run. AI, semiconductors, the golden child. The golden child's been freaking everybody out this week, myself included, and it's been holding on to this trend line for dear life. You know, it tagged it in February, which was a stop of the lows, got below it and tagged it, just did the same thing again. Stopped it out, tagged the lows again, and now it's trying to move higher. But if this stock comes under any more pressure below 108, you could see like hot knife through butter in this market. So we have to be careful. There are some opportunities. If you're looking for opportunities, looking for trade setups, check us out on Trading Analytix, and I'll continue to keep you guys updated. I hope you all have a great weekend. Try to relax after what all we just saw, and I'll talk to you soon. Thanks so much, and cheers.
All right, thanks, Nick. Let's get back into the markets. And like I promised you just before Nick came on, I'm going to talk about a few other markets. So let's discuss gold. Let's get over to the gold market really quick, because gold is getting so close to that 161% extension. We keep looking for a little bit more of a pullback towards 2,800. We're stopping short of that. So let me just say something like that probably is going to make sense to most of you. We're consolidating literally at the all-time highs. That's not bearish. That's actually bullish. Now, because we're in an ascending channel, I actually think that if we hit a new high, you might actually see a reversal. And I was just having a discussion with Jim Welsh. He's like, yeah, maybe sell gold just before it hits 3,000. Channel resistance is, you guys have seen this channel for like literally the last couple of months. I don't think that's too off. I don't think that's a crazy idea at this point in time. So if we hit new highs in 3,000 or around 3,000, you got to imagine relative strength is going to be divergent, right? We're going to hit channel resistance. So that's what I'd be looking at going into this next week regarding gold. And like I said, Jim Welsh just, him and I were having a very similar conversation. He feels the exact same way. Now, I also want to talk about crude oil. Boy, we came to major support this week. Now we've bounced, but take a look at that trend line. We broke down, so it gave us that move to the downside as we were expecting a big pivot here. But now this is that's what anybody and everybody and anybody cares about at this point in time. And I just want to give you a better idea, just because if you look left, you look left and you look at how where the support levels are below this, we're talking about a move down towards the low 60s, which happens to be, if you take this high, or excuse me, this low to this high, there we go. The 127% extension would suggest that we're going below all of these levels, which, my opinion is if we start getting down there, we're not going to stop there. So in other words, if we actually break down in crude, we could actually really, really break down. Now, that would have to coincide with weaker economic data. But as you guys have seen, there's certain pockets of data that are starting to show some very alarming signs of weakness in the U.S. economy. And the global economy could succumb to, that as well. I think it would be suggesting that, a U.S. and quite possibly a global recession is underway. So watch crude oil, especially if we break through support. We have talked about the bond market and how the 10-year has been very neck-breaking as of late. But notice that the 50% retracement is really stalling the market. Okay, we had a little bit of a false breakout, but we're not really pulling back either. Now, in the event that equities continue to move lower, that would suggest that the bond market's probably going to be catching a bid. But right now, I think it's quite messy. Just watch the 10-year, because obviously if the dollar may be a slave to what's happening with yields. So in other words, if bonds are going up, yields are going down, the dollar might be continuing to sell off. Now, we should talk about the S&P, because remember a couple of weeks ago on the S&P, we discussed here, I'll pull it up for you guys just so you can see it. The Wyckoff distribution pattern, we had this discussion, right, about this being a distribution pattern, the failed rally attempt. And right now, if you notice here, we're at the break the ice moment of the Wyckoff distribution. So that means any rally from here should be a failed rally attempt. So in other words, any move higher from this level in the S&P should find sellers moving forward. So you can just take this all the way back and say, okay, well, today's low was a bounce off of this, previous resistance that is current support. Now, moving along, going back over to Bitcoin about the big distribution pattern in Bitcoin, that's exactly what we're seeing here. This is a big distribution. We had the buying climax, failed rally attempt, breakdown. We got to the break the ice. We came back up. Okay, let's move that. We came back up, and we've already done a failed rally attempt right through here, right through these levels, right? That is the low volume rally. That's what we saw here. Now, the markdown effect is still in effect, if you will. So what we would be looking for in Bitcoin is something like this. If we take out these lows through here, the next move should be towards 75,000, and that's what I'll be looking for in Bitcoin in the days ahead. Now, one of the other things kind of stands out here is Donald Trump signed the strategic Bitcoin reserve or stockpiling of Bitcoin and other crypto assets. Bitcoin actually sold off following that news. That was overnight as I'm filming, so you can see the response was down initially. Now we found some buyers, but we get back below this 200 DMA, and that is probably going to be a bearish event. All right, so this is the point. This is the point in the video that I'm going to talk about the top 3 setups from. Well, I'm going to review the setups from last week, and then I'm going to give you my top 3 setups this week. Now, keep in mind, I trade a lot. If all you have to do is just go through the trades room and see how active, and you can see my posts because you can see when I am posting what I'm buying and selling. There's a running account of every position that I'm taking. I've been active trading so much as of the last several months. We had a big discussion about that. So just because I give you like the top 3 setups from this week, doesn't mean that I'm not doing other things. I trade all day long, all day, every trading day. So with that being said, when you're in the Forex Analytics community, whether you're in the Forex Analytics community through, just being in the community, or you're in the trader funding program, because that's when you also get access to the community. The reason why we do that is because when you're going through a one-step process, or you're actually trading our account or funds, we want you inside the Forex Analytics community, at least for a period of time. So, you have ideas, you have trade ideas, you have, people to follow, people to talk to. You can actually access me probably about 14, 15 hours a day in the chat rooms. So, take advantage of that. But also just note that even though I'm giving you these trade ideas right now, it's not even a little fraction of what I'm doing all the time. All right, so let's review the 3 trade setups from last week. So the first trade setup from last week was long euro dollar at 103 to 103.30. Well, I can tell you I played the euro on the long side this week. The low of the week was 104. No, I'm sorry. It was 103.76 on Monday. So did we get all the way down to 103.30? No, we didn't. But if you just sat there and didn't play the euro to the long side all week as it was rallying, I'd have to say that's on you, not on me. Obviously, I was playing the euro on the long side early on this week. So we got really close. You can say, well, Blake, we didn't get to your level. We didn't get to 103 to 103.30, so that one doesn't count. Fine. That one doesn't count. But I sure as hell hope you guys played the euro on the long side this week and did well with it, because it has been a great trade. Anyway, so one didn't work because it didn't quite get there, but you can argue that, and you can jump down in the comments below and let me know how you traded the euro this week. All right, trade setup number 2. Buy Bitcoin at 72,000 to 75,000 for a bounce. Well, that didn't quite get there. We got to 78,000. Or no, let me see. What is the low right here? We got as low as 81,500. So we didn't quite make, I was hoping we'd break down further towards 75,000. Hasn't happened. But don't dismiss that one. That one may actually happen in the week ahead or maybe in the next couple weeks. Anyway, trade setup number 2 didn't work. Trade setup number 1, well, didn't work. It just didn't happen. There's one thing about a trade setup that gets to the price level and doesn't work. There's one that just never makes it to the price level. So I spend half my time just waiting for things to happen, and they never come to fruition. So those first 2 didn't really come to fruition. Number 3, long euro sterling as close to 82 as possible. Stops below 82. I played the euro sterling on the long side Monday and Tuesday. And we got as low as about 82.40. And boy, did we go higher. I mean, again, I was trading it on the long side this week. Hopefully you did too. So out of those 3 setups, I'm going to say one of them for sure didn't happen. But the euro, US dollar, and the euro sterling, how about you be the judge? They both ripped like it was nobody's business. And I had, like I told you guys earlier, I did not expect them to move that aggressively this week. That just was a little bit of luck. But as traders, I'll take luck any day of the week. And somehow, some way, I tend to get luckier the harder I work and the more analysis I do. Maybe that's just a thing. All right, so hopefully you enjoyed those 3 setups from last week. What are the 3 setups from this week? So number 1, I want to get long Euro Swiss at while above 95, as long as the stock market is not selling off. So let me show you the Euro Swiss. Okay. So the Euro Swiss, we've been waiting for that double bottom to play out. It finally did this week. Now what I'm looking for, I'm eventually looking for a move like that. I'm actually looking for a little bit of a dip here to play. Whoops. Let's go into more intraday. Okay. I'm going to look for a move down towards 95 cents. So I'd love to see it break just below this to do one of these. Just like this. And then be on the long side on a dip just below the 95 cent level. So if you can get long, as long as it has daily closes above 95, I think you stay on the long side. So that's trade setup number 1. Trade setup number 2. I'm hoping this one can come to fruition this week. I'm looking for a short on the dollar Mexican peso below the 2020 level right here, below 2020, and adding below actually 20. So what I'm looking for, 2 trades, short below 20 or 2020, and then add below 2020. Let me say that again. I'm looking to short below 2020, 20.20, and I'm looking to add to my shorts below 20.00. Whew. Okay. That's trade setup number 2. You guys know the reasoning, and if you listen here every week, you guys know it's the trade of 2025 for me is to eventually be long Mexican pesos. Last but not least, trade number 3. I think you got to stay on the short side of the S&P. But what I'm looking for is I'm looking for the S&P to eventually, and let's get over to the daily chart. I think the S&P eventually, I didn't want to do that. Here we go. Once you get down to 55.50, which will be or 55.30, which will be the 161% extension, I am looking for 2-way price action. So in other words, I'm looking to sell the S&P and looking to buy somewhere down here and hopefully play it on the short side and the long side. So, you know, I'm looking for two-way price action down at 55.30 and for an eventual move below there, or eventual move below today's lows and a move down to 55.30. And if we see it, I do want to play it on the long side. So I'd like to stay short until we get there. All right. That has been a mouthful, and boy, has it been a hell of a week. And I hope you guys have had a great week of trading. Remember, when you're in Forex Analytics, you know, you have 30 different instruments here. You have the dollar index, you got crude, you've got Bitcoin, you've got Ethereum, you've got the DAX, you've got the boons. Gosh, did you guys see the move in boons this week? You got, you know, boons, you've got a lot of different assets. It's not just currencies. So there's 30 different assets. Look at all the different analysis, whether you're looking at, you know, Elliott wave analysis, whether you're looking at harmonic analysis, the basic technical charts. These are updated every single day. The basic technical analysis and the candlestick. You got great tools like the live squawk functionality. You have risk management calculators. And when you click this button right here, it takes you over to the chat room where you're going to find me 12 to 15 hours a day, I would say on average. You're going to find, oh, there's Nick. There's Nick talking about the S&P right now. You've got so many great traders in here discussing everything that's happening. So make sure you jump in the community. And I want to thank you all for, you know, hanging out with me, spending your time with me. I know it's your most valuable and important asset. So thank you for sharing that with me. If you like these videos, make sure you give me a thumbs up, give the team a thumbs up, comment down below if there's something that I might have missed that you really is on your radar. I'd love to hear from you in the comments section, and subscribe to this YouTube channel so you don't miss any of the exclusive content. Guys and gals, my name is Blake. Have a great week. Have a great weekend. Hope you get rested up because next week is going to be another crazy one. Thank God. All right. Long live the FX market. I'll see you guys on Monday. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.